Ladies and gentlemen, it is February 11th. Once again, flawless Fibonacci morning. Very powerful reminder. The most important level on S&P had been reached. Absolutely expected this spectacular rally that started 3 hours prior to the market open. This is Alpha Wave Trader proprietary Fibonacci level. 1800 level, the end of the minor trend on hourly chart. Bullish rally in spectacular progress. This is extremely late and pretty darn aggressive trade that's currently 11 points later. Reached decision point 2 and what is it doing? It's heading south. Please pay attention. This is decision point 2 to the upside. This is also the most important and the most powerful support on monthly chart. This is decision point 2 except support on monthly. Very famous 1800 numbers that's been respected by S&P for the last year and a half. For the last year and a half I warned you on social media, I warned you on YouTube channel, my blog, website and LinkedIn. Get out of these markets. As long as S&P respecting 1800, we're in massive bearish correction. This is worthless bullish pullback. This is the worst and most dangerous structure in the last year and a half. That's showing to me 90% chance this level will be broken. Nasdaq already broke through this level. Nasdaq is already to here, which I absolutely expect S&P to follow. As long as S&P respecting 1800 number, and as long as you know the rules, you know and absolutely respect that when price comes to 1800 number and it correlates with the end of the minor trend on hourly, and you know Alpha Wave Trader rules, look to take long and long and long from. And if you know Alpha Wave Trader rules, yesterday you were shorting and shorting and shorting S&P from this level. All the same formula. Does not matter what you trade. And this is the most important level that oil was dancing on for 4 years. This was the collapse on oil from 127 in 2011, and this was 86 number, where bullish rally played out in 2011 and 2012. Once 86 is out, oil went into free fall. And as I posted forever, don't be surprised 30 is broken, 10 is next. Clear? Posted for years. All spelled out by the price and Fibonacci only. This is what we are heading to. It is not the time to enter oil stocks. That pure and that simple. But you are using exact same formula as you are using on short-term S&P. Here is Dow monthly chart. 1600 on Dow is 1800 on S&P. And Dow right now just a little bit below, heading to 14,002. And that's all I have to tell you. Is it possible it's going to be stuck somewhere in this area for a little while? Possible, but it's not going to last forever. And that's the power of Fibonacci levels and method I developed since 2008. Tells you all the levels far in advance. Nasdaq looks a whole lot worse. And S&P continue respecting decision point 2 to the upside as much as it respected decision point 2 to the downside on yearly. Do not ever, ever, ever forget that. Exact same level. All the same formula. Don't matter if you day trade, don't matter if you invest. Price structure remains the same. Here's the Nasdaq, here's the Nasdaq. Drastically more bearish than any of the indices. Nasdaq is heading to 3500, no ifs or buts about it. 3500 is out, market in complete free fall. Whatever this dance, very similar to S&P at 1800. But unlike what Nasdaq had done in August 2015, unlike what Nasdaq had done in December 2014, I expect this level to be broken. I expect the Nasdaq at 3,500. 3,500 is out, market in free fall. And the structure we're witnessing right now is drastically more bearish than the structure we've been seeing in 2008. This is not the time, traders, to be long anything in this market unless it's something I discuss with my students. If you understand and pay attention to what price is doing on major indexes, you understand and respect where opportunity is setting up on other, which happens only every 5 to 8 years. Not everyone meant to be a day trader, but everyone meant to be an investor. And you're using exact same formula on ETFs, stocks, indexes, options, short-term, long-term forex. Formula remains the same. Risk management and trader psychology is the only difference. 7.2 like no other instrument. As S&P respecting decision point 2 to the downside, 11 points later S&P is reversing completely from decision point 2 to the upside. Shocker not, bearish trade reached decision point 2 again on S&P and found buyers. Exact same level as S&P Yearly, exact same level as S&P Monthly, exact same level as Dow as Nasdaq. Shocker not. No Fibonacci levels. And know what to expect. And why in the world are buyers stepping in on S&P? Because that short trade came to reversal zone. Each and every time price comes to reversal zone, play by the rules and monitor for reversal. But nothing is possible unless rules are met. Are you clear? Bullish rally in a progress, stop outside of break even. Reversal zone is reached. And that's the magic of the price and Fibonacci that I promise you never, ever, ever gets old. How did I know that when buyers will step in, they will step in with vengeance? That's what separates trend trader from trader who is interested only in instant gratification. Never trade against the trend. 1800 number in front of you. Don't sleep. You know the rules. Enjoy the rally. This is a number I proclaimed on social media for the last year and a half. It's everything on S&P. All we have is our extended bullish rally this morning, and we're still catching lovely, lovely, lovely rallies. What if you bought at 1800? What if you knew the rules here? Where are you right now? Oh, shocker, 30 points later, yum. And that's the magic of the price. No indicator on the planet will ever tell you that. Are you clear how essential it is to respect when reversal zone is reached? That pure and that simple. 3 points, 4 points, 6 points, depending on your point of entry on S&P. Here, reversal zone, crucial, essential target is reached. So again, this famous dance around the 1800 number is the most important number on S&P. Is the most crucial support always and forever. This will determine the rest of the story. If 1800 number today is broken, ouch, ouch, ouch. Here's the levels to the downside. 1784, 1753, 1721. One step at a time. No one touches this long unless rules are met. Again, you witness the importance of the minor trends. What S&P had been doing the last 2 days. Key moment, what will S&P do at 1800? Tomorrow should be extremely interesting day, as we are witnessing further collapse on oil. As we are witnessing, will S&P remain stuck at 1800? Will it stage spectacular rally today? Or is it going to dance here endlessly? This is the most important moment. This is the most important level. And this is what we concentrate on time and time again in Friday class. Please do remember, everything closed. Friday devoted to Fibonacci education only. If you choose to start the class on February 16th, Highly encourage you start prior to tomorrow. You get extremely comfortable in Fibonacci class and you spend weekend preparing, reading manual and modules. Any questions? Feel free to email me info@fibinstitute.com or 925-257-4298. But please review the information first. So, as of February 11th, 11:18 EST, this is what we accomplished this month. 23 trades, 20 positive. All trades reached key targets with reversal zone and further, 15 trades later. Multiple of these trades, smallest target had been 4 to 5 points, with ultimate rallies finishing with as much as 20 plus points. That is volatility in this market. That is dream come true in day trading, as long as you know what you're doing, as long as you play by Alpha Wave Trader and Fibonacci Trading Institute rules. Knowledge of Fibonacci and execution, what will make a world of difference, and what I teach in the course daily.